Welcome to Theo Trade. Don Kaufman here, November 19th, 2025. We're just about 30 minutes after the cash close. NVIDIA releasing earnings. Maybe, just maybe, helping this market maybe find its mojo once again. Is the AI trade back on? I know everybody's going to be kind of questioning that right now. So here we are. Let's just cover it. The S&P futures, they were already up some 30 handles right at the point when NVIDIA released its earnings. So here's that bid under the marketplace. Well, right now, yeah, we're almost up between 30 and 40 handles in terms of the S&P futures. And NVIDIA, okay, at this point, still largely destabilized. I mean, we're only moments after those earnings numbers came out. Obviously, there's still a conference call, but the expected move, and that is for those of you that do not speak options geek, the expected move is what the options market depicted risk to be around this earnings. That expected move is right around between $14. Yeah, we'll just round it to $14. You can see I've got a butterfly centered right at 200. And the reason I'm actually bringing this up, because we're talking about obviously NVIDIA and getting its groove back on for the whole marketplace, but maybe a little bit of a cautionary tale in here, and I'll tell you why. So NVIDIA closes at 186 right now. Okay, is only trading marginally higher, and I know that the S&P's got a bid under them, and I know they're up between 30 and 40 points, and I get it, I do. But this is a little bit disconcerting because when the market expects 14. Okay, when the market expects 14, and right now, okay, we're nowhere near that. You're, between $7.50 and $8 higher. That mojo may not be found. The other thing is we still obviously have to hear, as I said a moment ago, the conference call. And maybe the conference call creates a bid and the stock actually rises to 200. So it's still kind of early in the process, but we're also still at that point where this little monkey can reverse and reverse quickly. And I'm actually going to show you that. And again, I just want you guys to understand something, that the marketplace is still projecting, okay, fairly significant forward risk. How could you possibly see that? Of course, people are going to look at the VIX and they're like, well, but the VIX today, Don, contracted substantially. Really? Do you see a substantial contraction? Here I see the VIX down a point. Okay, the VIX basically sitting, okay, near some of the recent highs. Okay, maybe, okay, possibly. Take a look when I zoom out over here. This is actually a fairly critical spot because you start to actually pop above 25 in the VIX, okay, and that thing is just going to light up. It's going to ignite to the upside. So a little bit of unease. Now that's VIX. And for those of you that know me specifically, okay, I don't need no stinking VIX. I'm actually going to look like VVIX. This is actually going to tell us, okay, how institutional hedging is going on. What the VVIX is actually showing you, and let's get really, okay, like granular right now. What the VVIX is showing you, it's hedging activity, okay, because the VVIX is the volatility of the VIX options. So forget about looking at a chart. We don't need no stinking chart. The VVIX is actually showing us a almost like depth, if you will, into the December 17th VIX option expiration. And if the VVIX is higher, which, today you're like, no, the VVIX is down like 4%. Okay, the VVIX is flying, people. It's above like 110. It's all the way at like basically at 120. So when the VVIX is at 120, the truth be told, you need to be under your desk, helmet on, rocking back and forth. Okay, a VVIX of 120 is an extreme reading. So clearly, okay, some of this has to do with the fact that, NVIDIA's earnings are coming out tonight. The VVIX closed, NVIDIA's earnings came out, okay? But you know what, okay? So are we through the risk? Are we through the risk? And you can see some of the volatility risk is actually coming off, okay? Up until the point where, well, it just kind of stalled out. We still have considerably higher volatility, even after, and that's the exact point. So even after the NVIDIA earnings have come out, you're like, oh, volatility really crushed down. Initially, they actually spiked and it came down. It's pretty nominal. Net, when you start looking, again, here we're going to zoom into, this is the volatility futures. You don't get too confused over here. I know that this looks like a big drop. It's not. And this is actually a contract roll. Okay, so the volatility futures have a number of contract rolls. But my point being, okay, in the volatility futures, this is a product that's open right now, and it's not really dropping, okay, nearly as much as we would have anticipated on the NVIDIA earnings. All right, switching gears entirely, because NVIDIA, if you will, I think that the big thing to take away over here is it didn't set this marketplace at ease. That's okay. The truth behind it, it didn't set the marketplace at ease. The marketplace, yeah, it's higher right now, but let's go see what do we look like on the week. Okay, so on the week, and I'm going to kind of zoom in right now to the SPX, the mother of all products. So when we zoom into the SPX, where are we? Okay, so the week actually started off pretty sour note, some sell side activity. Obviously on Tuesday, it turned into a little bit of blitzkrieg to the downside. We did kind of bounce back to some degree today. Today was noise, but in all three of these, and if there's one really critical point to be made in all three of these trading sessions, what do you see? Okay, see that immense range? Okay, these huge wicks. It's range. The range is wide open, people. We are seeing two-sided trade, and that I am all about two-sided trade. Look at some of these ranges. In fact, I'm even going to back this up a little bit. Look at the last couple of trading sessions. Okay, this is again, it's fairly wild because this week's expected move. This is where the week started. Okay, to down here. This is the lower edge. Okay, that right there is 144 points. We actually sold off basically 144 points between Monday, obviously, and Tuesday morning. We're down 144 points. Okay, we bounced a little bit off that. Okay, but again, it's the ranges that I want you to pay attention to. Like, forget for a second that direction even exists. People are so infatuated with direction. Okay, they'll miss the point that the ranges are what you want to focus on right now. Why? You're getting wild and woolly two-sided trade. And there's absolutely no reason to believe that that's going to change. Retail traders have this just critical issue, and that is they can't switch gears. But they're gonna buy the dip, right? They're because every time they do buy the dip. Okay. If you need any more explanation of this, any more explanation, why don't you go look it down right now at something like crypto? Okay, where's the dip being bought? It's not. Now, I would expect this is in dramatically oversold territory, that there is going to be a little bit of a bid back to it. But the assumption that anybody needs to buy a dip, okay, is kind of thrown out the window. This is a product now. And again, I'm using this, okay, just to serve a point that, let's actually kind of zoom out for a second. From recent high to where we're presently trading, you're down about 30% in Bitcoin specifically. These are Bitcoin futures, but you guys kind of get the point. Dip buying hasn't been there, okay? But what has been there is two-sided trade. So we're opening up into this two-sided trade, and when we get there, okay, you have to start to look, in more volatile times, you have to start to look and to latch onto, okay, big round levels like expected move, okay? Do not be surprised, again, and I'm going to zoom into this, okay, specifically for you. Do not be surprised, again, if we actually come down to the lower edge of the expected move. So you're like, but we're gonna go higher this week because NVIDIA, their earnings, okay, whatever. We moved 50 points higher today. Oh, 50 points. Do you realize that today and today alone, okay, there was a $68 move expected on the SPX. Actual move is $24. Okay, that range is freaking huge. So right now, even after hours, we only have a $50 move. We're well within limitations. Okay, so this lower edge right down here, let's just call it what it is. Let's just call it 65.90. There's still a very strong possibility of ebbing right back into that 65.90 and retesting it into Thursday or Friday. So it's and by the way, this is not me being bearish. Okay, this is a marketplace that just simply wants to latch on. Okay, to seams in the risk. The other thing you want to look at, look at the S&Ps. Okay, and it's really hard when you start getting volatile to pick out specific levels. Okay, in and around, the present level, there's just not much there. We had a little bit lower here. Once again, I was talking about testing into like 6,600 the other day, just big round levels. Okay, very, very plausible. So keep your helmet on at this point. Volatility is still, well, rather elevated, isn't it? Okay, and when you say volatility is elevated, no, it came down. Okay, yeah, it didn't come down much. Okay, whether you're looking at the volatility futures, and volatility futures, again, this is a product that's still, still open, still trading. Okay, whether you look at VVIX, and the VVIX is still rocking there at 120. All of these still point to signs of risk. Now, okay, last thing I actually want to cover in here. Tomorrow morning, you're actually going to get what I would term depleted data, data that's from September. What's coming out in the morning? Well, non-farm payrolls. How weird. We have non-farm payrolls, okay, that are going to be out. In fact, I'll actually cruise over to the calendar here. Okay, the employment situation is coming out. Okay, basically at the same time as jobless claims, and it's coming out on a Thursday. You're like, but it's supposed to be the first Friday of the. Okay, yeah, well, it's not because it's coming out tomorrow. So non-farm payrolls is coming out tomorrow, and whether it's Nvidia, non-farm payrolls. Okay, there's no other really big earnings. Here's the one sticking point, and I'm going to give you a really good sticking point. This entire week, as I was saying a moment ago, this entire week, the expected move was 144 bucks. Just bear with me on this thought for a second. So the entire week was looking for plus or minus $144 move. You go higher, you go lower. Okay, things are going to get crazy. Now, we've already passed through what? You're like, it's more than half the week. We passed through Monday, Tuesday, Wednesday. Okay, what do we have left? You got Thursday and Friday. You're going to start to get into some holiday trade. Yeah. So give me a good reason for this. The expected move right now, okay, between now and Friday is still sitting at 107. That's a big boy number. That's a very big boy number. And yes, Nvidia has somewhat to do with that. But even looking into tomorrow, do you realize tomorrow alone, the expected move is 80 bucks? I don't care what you see over here. I don't care if we rally. These expected moves and these volatilities reek of two-sided trade. Keep your helmet on. We still have considerable risk. Sure, for the time being, all right. Nvidia gave the market its mojo back. Could be very short-lived. Thanks, everybody, for joining us here at Theo Trade. Have a wonderful evening. Bye-bye.